There are important changes ahead for loan classifications under 101, and it's important for you to understand these changes so your liabilities are classified correctly and the disclosures are complete. These amendments change how loan covenants affect whether liability is classified as current or non-current, and the disclosures that needs to be provided. For entities with a 30 June year end, 30 June 2025 will be the first time that these amendments will apply. The key question that entity needs to consider under these new changes is when does the entity have to comply with the covenant? This slide sets out the new requirements. If the covenant needs to be complied with on or before the reporting date, then you will impact the current, non-current classification. If the entity complies with the covenant, then it's non-current. But if the entity did not comply, then the loan is current. But if it's a covenant that the entity must comply with only after the reporting date, we call a future covenant condition, it doesn't affect current or non-current classification at reporting date, but additional disclosures are required. Let's look at an example of this. Entity Z has a 3-year loan and a loan covenant based on the current ratio. In scenario 1, the loan requires the ratio to be above 1.5 at 30 June 2025. Z's ratio is only 1. Even though the bank assessed compliance later, say 31 August, the key is that the covenant applies at reporting date, and Z did not comply at reporting date, so the loan is classified as current. In scenario 2, the ratio must be above 1.5 at 31 July 2025. As at 30 June, Z's ratio is only 1.0. Z predicts its ratio will only be 1.2 at 31 July. So he predicts that it will breach the covenant when it is tested. Now, because July is after the reporting date, it doesn't impact classification. The loan is therefore classified as non-current because repayment is more than 12 months away, ignoring the fact that you will breach the covenant 31 days after the year end. But Z still needs to disclose the covenant terms, the timing and nature of the covenant, any difficulty in complying with the conditions, including the risk of breaching the covenant, and that the liability could become repayable within the next 12 months. This may also need to be disclosed as a going concern uncertainty in the 30 June 2025 financial statements. So in summary, the updates to 101 changes how covenant affects liability classification, and more extensive disclosures may be required. So make sure your loan classifications and disclosures are compliant and complete under the new 101 changes, and reach out to me for expert technical advice.